When is that mainly on the account now?
What is that?
Where are you on the account? Is that for you back up?
Monday I was -8, now I'm
All
already
right then,
minus
good
8.
afternoon everyone, as we are at the end of another week of trading. So I'll have a bit of a review. Quite start to the week. Markets are certainly hacking around a bit off the back of some data prints, but it obviously is the end of the quarter. So today being the last trading day of the current quarter, last trading day of the month. All those things combining with each other to bring some volatility into markets over the last kind of 24 hours. We'll have a look at that once we jump around to some charts. But we'll start with the calendar, business climate, and obviously the opinion of people for how the business situation in the country is going to go going forward. Below 100 isn't great, 85.7%. So confidence is lower than previous, slightly above consensus. So it's like a football match, kind of win one or score one, other team equalises, a bit 1-1, so not too much to see there. Consumer confidence negative in Germany, to be expected with the economy not performing well and interest rates where they are at, and there's no signs of them coming down anytime soon, so below consensus for that. But inflation in Germany, they continue to make progress on inflation. A substantial drop of 1.6% from the previous month. Consensus 4.6, also below consensus, and that kind of puts paid to any thoughts of the ECB going to hike interest rates again. I would say Euro didn't like the initial release. Euro dollar has popped higher off the back of that, but obviously the reluctance from a central bank to hike interest rates, stopping hiking interest rates, is a negative for the currency. DAX popped higher, a little bit off it as well, a little bit of a respite for the DAX as well. Into inflation across the Eurozone today. French inflation, previous 4.9, consensus for us to tick up to 5.1, actual 4.9, so slightly below consensus, even though it's in line with previous. Inflation out of the Eurozone as a whole, 5.2% previously, 4.3 versus a consensus of 4.5. So again, inflation pulling back across the Eurozone as a whole. Italian inflation in line with consensus but lower than previous. So numerous countries throughout the European economy making progress on inflation. That does not make for a situation for the ECB to continue hiking interest rates. We come around to the US then, with Fed's Neil Kashkari, the Minneapolis president, suggesting earlier on in the week that the Fed were going to continue, or that another hike of the interest rate would be relevant if the US economy continued to outperform. So the chances of one more interest rate hike do rely on the data if it outperforms, right? So then you got to look to the data and you got to see if it outperforms, right? Durable goods orders, consensus 0.5%, up 0.2. That's up 0.2 when it was down 5.6 in the last one. So not kind of too much to see there in terms of that. GDP lower than previous, but consensus 2.1, in line with 2.1, so no outperformance of expectations there. Bring us in to core PCE today, and core PCE, which is the Fed's preferred metric of inflation, below consensus at 0.1%. Right, that is not a situation where the Fed continue to hike interest rates if inflation is at that sort of a level. I think we'll probably want to wait and see what future inflation prints have to do before making any sort of an adjustment. Now, they did raise the dot plot. The dot plot does suggest we'll see one more hike this year if economic data doesn't line up and surprise to the upside. I'm not so sure we'll actually get one. It's not really a situation where the Fed are going to continue hiking. The PCE price index below consensus, and the year over year, the 3-month figure in line with consensus at 3.5%. That's not really a situation where they should continue to look at hiking interest rates. So now part of me thinks, just off this data, it's really inflation data you're going to need to keep an eye on. Yeah, I'm not so sure they go and hike interest rates again, if I'm being perfectly honest. That then makes you have a look at the US dollar. What are bond yields doing? Bond yields are lower. They are pushing lower. The 10-year pushing lower. The 2-year yield pushing lower. That is not a situation where the market thinks the Fed's going to continue hiking interest rates. Now, that is what we're having a look at. So it could just be a pullback in line with kind of month-end rebalancing, quarter-end rebalancing. So you can't read into this too much just yet. But yields are making an attempt lower. What does that mean for the dollar? The US dollar is making an attempt lower with it. Aussie, Kiwi, Euro and Sterling all higher. Dollar Swiss, dollar CAD, dollar yen all lower. In terms of the Japanese yen, the Bank of Japan stepped in and purchased $300 billion or 300 billion Japanese yen worth of JGBs, worth of their 10-year bond in order to keep yields suppressed. It's up by kind of 0.7%. Hasn't quite reached that 1% upper band that they were alluding to, but they have stepped in and purchased bonds, which, you know, hasn't really done much for the price of the Japanese yen. But they are starting to step in, are starting to intervene, and that's what we've been looking at on all these videos over the last few weeks with this Japanese yen. The idea was to continue buying it, but continue buying it until a point. Until the point was 150, 151.944. It's a pity we haven't got up there, and the Bank of Japan have had to intervene, give us a pretty aggressive move, but the US dollar seems somewhat vulnerable coming into month and quarter end. Equity markets have also enjoyed a rally. You can see the S&P, the Dow Jones, the Nasdaq, the Russell all pushing higher. You can see the DAX, the Euro stocks and the FTSE all pushing higher with it. The VIX then pushing lower, which is obviously then a fear gauge, or used as a fear gauge for the S&P 500. So you got stocks bullish across the board. You got the US dollar bearish, being driven by yields pushing lower, and that is how we end this week. The US dollar, though, will be something to watch as we head into the close this evening. We come back still positive on the week after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 consecutive weekly gains. It is still on course for its 11th consecutive weekly gain, albeit not that much, but it still is positive on the week. Now, that is an incredibly strong run that we have not seen since back in 2014. So still is things to keep our eyes on into the close today. But, you know, euro dollar has come a long way. It will need a pullback at some point. Cable's come a long way. We'll need a pullback at some point. Those two currency pairs likely to drag the dollar index lower. Maybe potentially we do break that uptrend. But is this signs of a larger move, or is this a bit of rebalancing? Is this a bit of kind of quarter end flows, month end flows? That remains to be seen. Can't quite put our fingers on it just yet as to which one that is, but either way, you've had a strong pullback in the US dollar, you've had a strong pullback in yields, and you've had a solid bounce back in equities. Is that quarter end? Is that an actual changing of the trend? Remains to be seen. The economic data, inflation figures, don't make for great reading for Fed hawks. Let's see how that plays out next week when we get to it. But which one does that mean? Not quite sure just yet. Need a little bit of time to figure it out. But for sure, those trends are looking vulnerable as we head into next week. But that's it from me then. I'm going to wrap it up there. I'll let you get on with your weekends. But nice and sunny here in London. Maybe the last bit of sun we'll get. Hopefully it's a nice bit of weather over the weekend. But do get some rest and relaxation in if you can. Do recharge the batteries. We'll be ready next week for another week of trading. But next Friday, I have another video. Have a good weekend, and I'll speak to you then. Have a good one.